And I caught up with Leighton's new Chief Executive, Hamish Tyrwhitt, shortly after his briefing session with analysts. Hamish Tyrwhitt, welcome to the programme.
Thank you very much.
Now, you say today, I truly believe we're back on track. I can see the signs, under new management. But you did have a shocker as a company last year. How are you going to restore investor trust?
I think the key to Leighton is we're a project-based business, so all projects start, all projects finish. So although we're an enormous company, we actually have the ability to affect and implement change quite quickly. So the main thing we've done is revisit what the role of holdings is, and Leighton Holdings is a strategic management company, and to look at where our balance sheet is deployed, what the markets are like in the future, where we want to position our operating companies. And what's absolutely fabulous at the moment is that Leighton are positioned across Australasia, and we're the only company that's providing those services through that entire area, and we're benefiting off the growth of and the urbanisation of China and India.
Your gearing, it's going up in June, I think 43% by June, which is at the high end of your target range. You've got to refinance, I think, quite a lot over the next 2 years. Credit rating's gone down a notch. Are you confident that you will be able to refinance at reasonable levels?
I think the confidence was reflected in the dividend that we paid out today, or that we've announced today, and we're sitting at 32%, which is really that's below the range that we have. So that shows the strength of the business at the moment. We have to fund the balance of the loss on Airport Link and VDP over the next couple of months, which is why it peaks. But then you start seeing the back end of the year, projects coming through that are more profitable and better quality, and that will reinstate the gearing down to more traditional levels.
Just on the desal plant, it was at the time quite a horrifying benchmark for many employers in terms of the workers' pay and conditions agreed. You say now that one remaining risk is productivity, I think on the engineering side. Are you worried about these sorts of conditions being pushed for by unions more broadly? Because you are an enormous employer, aren't you, in Australia?
I think the key with the productivity issue is things like the roster, where if you're on a 4-day cycle and you're doing a job that's complicated, that baton change of people handing over one job to another person creates a lot of inefficiencies.
But then you're talking about more flexibility, aren't you? So that is again an issue about the Fair Work Act, isn't it?
Yes, correct.
Habtoor Leighton is the thing you said today keeps you, the one thing that keeps you awake at night. You've made provisions for additional funding of $136 million. I think your CFO, Peter Gregg, said today that if you retired all the loans, the leverage would be down to about 6% for the whole company. I mean, it is a massive commitment there. Is that the last call, that $136 million, is that the last call you're likely to have to make?
I think the thing to look with Habtoor Leighton Group is it's 3.5–4% of our work in hand and our revenue. The business there is viable going forward, and to recover the receivables that we have is a matter of time and running through the issues, and that's what we're focused on at the moment. And if you look at that business, once again, it's not about what its contribution is to our growth. It's how we reinstate and get the balance sheet back that's currently committed to that business without generating the returns that we need.
This AFP investigation in Iraq, which came up this morning, shares have been hit as a result of that announcement. I think the market sort of immediately suddenly thinks AWB scandal and this sort of stuff. Are you worried that this will impact your reputation over there?
No, look, I think the issue there, all I want to point out is that as a company, our values, our brand, our culture are absolutely key to us, and this was, the issue was identified by Leighton, and we went to the authorities, and we're not at liberty to talk any more about this because it is something that's ongoing at the moment. But I can assure you, for Leighton, it's about values, culture, integrity, discipline, and that's what we're focusing on.
Can you give the market any sense of how long this will take to clear up?
We have no idea, even if there is an issue, so I can't comment on that.
Cash, you said today, was absolutely critical to you, maintaining the momentum of your day-to-day construction jobs. There's much more control over cash management. Your shareholders, however, Hochtief and above that ACS, are struggling much more on that front. Are you absolutely confident that the governance setup that ACS agreed to, delivering an independent board for Leighton, and also a limit on the shareholding that Hochtief can have. Are you absolutely confident that that will stay rock solid?
Well, there's two questions you're asking. One is in regard to dividend payout or cash, and I can assure you all of our shareholders that I've spoken to, you know, invest in Leighton because we're a yield stock. As far as the governance structure, you know, that's really, you know, question of the chairman, but I can assure you we see no influence of that whatsoever, and you know, the Hochtief have been a shareholder in Leighton now for 25 odd years. And
so small shareholders can feel safe?
Very much so.
Hamish Tyrwhitt, I wish you good luck this year.
Thank you very much.
Thanks.
Appreciate it.